Good morning, everyone. This is Paula White with the second attempt at this lecture for week 3 of Accounting 444. This morning, we had some internet issues because of brownouts in San Diego. My internet through my personal hotspot was spotty also, so we decided as a group to allow me to record separately by myself offline and put it up on the post it up on announcements. With the knowledge that you can email me, paula.white@independence.edu, and my cell number is 760-710-7841. I will get my cell messages returned to you as soon as humanly possible. Just note that some nights like tonight and tomorrow night I will be in an on-ground classroom from 6 p.m. to 10 p.m. Pacific time. So I can't return phone calls or emails when I'm in front of a classroom of students. Just like I can't do other things right now when I'm in front of you. So just be a little patient. I will get back to you, and I will be very fair in the grading of the grade book. Talking about grading of the grade book, let's go to announcements. And let's see here. It says, hello everyone. I've made changes in the system to allow you to submit your work, both assignments and assessments, through the end of the course, which is July 11th at midnight Mountain Time. This does not change the due dates of assessments and assignments, but does give you the flexibility to submit as late as you need to be based on your needs. Now, I was under the wrong impression that assessments were not extended. I have revised my position and have opened up assessments to you being able to submit them as late as you need to have them, be late, with late penalties, but it can't be past July 11th at midnight because the class closes then. So you have, if you're in that situation, you have 10 days to get your work done and completed. And as I see them, I will go ahead and grade them. At the latest, I'll grade them within next week. So with that announcement made, let's look at our the homepage and what is expected this week. We have an assignment and we have an assessment. The assignment. Turn this on. Okay, in this assignment, you have a YouTube video to watch, and then you're supposed to review it and determine why it's important for the state and local governments to have a balanced budget and prepare for economic downturns. And the assignment should be 2 full pages and APA compliant. So basically, one of your classmates asked, do you want numbers? He doesn't know what numbers to put in. And basically, it's just a conceptual paper. You could give me a short review of what the video points were, and then basically a paragraph or two on determining why it's important for state and local governments to have a balanced budget, pros and cons, and your research opinion, and how could state and local governments actually prepare for economic downturns. I gave an example of about a year and a half ago. We had a government furlough, which means the government shut down. The federal government decided to shut down because they could not come up and agree to a balanced budget. And believe me, their definition of balanced budget is different than most accountants' definition of a balanced budget. But they came to an impasse, and they weren't going to be able to get past it, so they just decided to flex their muscles and shut down parts of the government. Obviously, not every part of the government was shut down because we were still safe with our military and whatever. So how did they shut down? Well, they shut down by taking 20 people they had to take off every Friday without pay. So they went from 5-day work week to a paid only 4-day work week. They couldn't even come into the office and work for free on that 5th day. They had to stay out. So things kind of shut down because work done by one department was required to get something done by another department. That department couldn't get all their work done, so that flowed to another department. So it kind of created an administrative nightmare with all the paperwork mountains that were created. But what the IRS did, and at that time I looked at their website, and it still might be on there, it was their government furlough a budget plan in case that the government went on furlough. And they had an immediate plan, they had a short-term plan, they had a medium-term plan, and they had a long-term plan. And their long-term plan was basically shut down the entire operation, all the support systems and everything, except for one department, collections. So it was an interesting document to know that they were planning on a short term, maybe 2 weeks, an immediate term 2 weeks, a short term 1 month, a medium term, and then a long term plan on who would be laid off, what functions would be shut down, and how they would be containing costs during this. But they didn't contain the costs associated with collections from people who owe taxes. So anyway, this should be an interesting paper to research and write. Just kind of keep it on point and within 2 pages, and you'll be fine. I look forward to reading each and every one of your papers. And then we have the assessment. The assessment for week 3. There's just a 2-line statement, the statement of net assets and the statement of activities under GASB 34 are prepared on a government-wide basis. These statements are prepared on the accrual basis using the flow of economic resources concept. Explain this rationale in 2 pages using APA format. That should be pretty easy to research, find references on, and give me 2 pages on. So basically that's due by 11:59 p.m. Mountain Time this Saturday. And then let's look at the calendar. That's Saturday the 4th of July. We don't have a sliding date for the 4th of July, so plan your holiday activities accordingly, or shall I say plan your academic activities to be as early as possible so that you can enjoy Saturday and Sunday, the 4th and 5th of July, the birth of our country. So plan accordingly, because even on the discussion forum, get the stuff in early so you don't have to even bother with it. The sooner you can get your initial post in, which is due tonight, the sooner you can get that initial post in, the sooner your classmates can actually start posting their responses and get done before the 4th and 5th of July. So I kind of suggest doing that instead of waiting for the 5th of July to do everything. But we'll see who listens to this, whatever, this recording and who doesn't. Anyway, let's go to the PowerPoint for the day. And like I said, this is my 3rd attempt at doing this recording. We had 2 attempts this morning with some students online, and we voted unanimously to have me pull offline, record as clearly as I could with technology because we're having brownouts here in San Diego, and then post. So that's what we're doing, and that's why you're not going to be seeing me looking for people's comments, because I'm in a room by myself, talking to myself. Really, I'm talking to my imaginary students who are quite fun. So this is a really cloudy picture of a big city. So learning objectives, there are many in this PowerPoint. You do have this PowerPoint and the PowerPoint for next week already uploaded to your in your announcement section. So you already have it. So basically, GASB Statement 34 was issued in mid-year 1999, and it requires, as it says here, financial statements using government-wide approach. The statements, it requires statements emphasizing the major funds, and there has to be an MD&A, and MD&A is management's discussion and analysis. This is very similar to the statement from the CEO of for-profit organizations inside of the auditor's report. So now we have GASB 34 requires full accrual accounting for all government-wide statements, which is the flow of economic resources approach, which is kind of what I think your assessment's all about. So GASB was established in 1984, and it's a separate board of oversight of financial accounting foundation, and it is responsible for establishing the financial and reporting standards for governments. GASB endorsed prior statements and their interpretations of the NCGA, as well as the standards embodied in the 1974 ACC444week Industry Audit Guide. So the reporting model, minimum information required. So government-wide and fund financial statements. Government-wide, you have a statement of net assets and a statement of activities. This is the government accounting's version of the balance sheet, statement of net assets, because no one owns the government. There's no stock. You don't buy stock in the U.S. government. So they don't have an equity section. They just go down to net assets, assets minus liabilities. Then your statement of activities. So if statement of net assets is a balance sheet, I would expect the statements of activities to be the government's version of the income statement. And then you have fund financial statements. So you have in the government funds, you have balance sheet, you have statement of revenues, expenses, expenditures, and changes in fund balances, reconciliation to government-wide statements. So even on that aspect, The governmental funds need to be reconciled with the government-wide financial statements. So proprietary funds, you have the balance sheet or statement of net assets, statement of revenue, expenses, and changes in net assets, and statement of cash flows, the direct method. And then you have fiduciary funds, statement of net assets, statement of changes in net assets. So let's talk about the hierarchy of these standards. We've been studying in your entire academic career about FASB and US GAAP, and probably some discussions about IFRS. So here, the GASB and the FASB each have their different responsibilities for setting standards for entities under its jurisdiction. The pronouncements of one board should not be mandatory for entities under the jurisdiction of the other board. So we're talking about Standard 34, GASB Standard 34. It should not have anything, it should not be a mandatory standard for for-profit organizations under FASB and vice versa. So there's 11 categories of fund entities. You have the general fund, the special revenue fund, capital projects fund, debt service fund, and permanent funds. You hear about the general fund a lot in state government and federal government, and in years of elections, it's called like slush fund. It's the fund that tax money goes into, but doesn't have a specific purpose, but it's there to cover the operating costs of the government. So you have general fund, you have a special revenue fund, you have a capital projects fund. The funds in number 2 and 3 are what we're talking about in the discussion forum this week. Debt service fund would be the funds required to servicing the debt. Can you think of what perhaps that would be? And I know I'm talking to a room of an empty room here, and the kitty cats are not answering my accounting questions that I posed to you. So to service debt and have a fund to do it, it's going to be how you get the principal and interest payments into a fund that actually will be used to expend it to take it to the people that you owe money to. So proprietary fund, okay, so the governmental funds are expendable. Think that money will go out because of them. Proprietary funds are non-expendable. So this focuses on the determination of the operating income, changes in net assets, financial position, and cash flow. So you have an enterprise funds and you have internal service funds. And then you have fiduciary funds. So those are more like pension trust funds, investment trust funds, the private purpose trust funds, and agency funds. And these are the assets held in a trustee or agency capacity for others. So, the general fund, all revenue and expenditures of a governmental unit not accounted for in other governmental or proprietary funds go into the general fund. I think as you read your newspapers now, your magazines, and your professional journals, and even listen to the news, you're going to hear some of these terms bandied about: the general fund, the special revenue fund, the special fund, especially since this coming up year is election. So then we have special revenue fund, proceeds of specific revenue sources that are to be used to finance particular functions or activities of a governmental unit. So special revenue funds, as like a general fund, have steps that have to be taken. You have to establish a budget. Encumbrances are used, I mean, remember last week, encumbrances is an account title indicating basically budgets within the general ledger framework. Fixed assets are only reported on the government-wide statements. Depreciation is not reported, and long-term debt is only reported on government-wide statements. Right now, you're probably thinking, this is not what I've learned all this time on U.S. GAAP. And it's true, U.S. GAAP, we have to have our fixed assets on our financial statements. We have to have depreciation reported, and long-term debt is reported on our financial statements. What's all this type of statement, that type of statement all about? Well, it's the special nature of accounting under GASB, which is totally different than FASB and U.S. GAAP. With that being said, I just want to tell you that I don't know exactly your backgrounds in this reporting, but I had a student in a ground class one time, and she was always kind of lost and a little bewildered in all the accounting classes that I ever saw her in and had her in until she took government and nonprofit accounting. She was the only one who understood it because she worked for the government. She deals with encumbrances every single day, and these terms and this class finally was relatable to her. So everyone else is going, I don't get it. So if you don't get it, you just have to study harder because you have been trained all along to know and understand U.S. GAAP, therefore FASB accounting, not GASB. So if you're a little frustrated at the moment, embrace it and move forward because it's just what happens with government and nonprofit. So now you have a capital projects fund, and those are resources acquired and to construct major capital facilities, and they include resources, include proceeds from long-term debt issues. You can get grants or payments from other governmental units, funds from private sources, transfers from other government funds, special assessments, and other sources. So let's look at an example here. I'll take a good copy. The town of Aberdeen authorized a fire station to be built at an estimated cost of over $150,000. I know that can't be a California city. Aberdeen is in, I believe, Kansas. On January 1st, 2008, 6% bonds with a par value of $150,000 were authorized and issued. Any difference between the par value of the bonds and the proceeds from their sale is transferred to the debt service fund. The following transactions related to the capital project funds occurred during 2008. Encumbrances were recorded in the amount of $150,000. You received proceeds from a bond issue in the amount of $155,000. So you had $5,000 more received than what you needed. The premium on the bond issue, which is that premium, was transferred to the debt service fund. Contract billings of $150,000 were approved for payment on the completion of the fire station. The contractor was paid except for a retention of 5% of the contract. Then the final contract price was paid. Nominal accounts were closed. Let's see what those journal entries look like. So first, preparing the entry for the encumbrances. You debit encumbrance for $150,000, and you credit reserve for encumbrances $150,000. That's basically putting the budget into your ledger. Proceeds of $155,000 from the bond issue were received. So increase in cash, yay, debit, and credit bond issue proceeds. Now the premium, the difference between the $155,000 and the $150,000, needs to be transferred over to the debt service fund. So transfer to debt service fund, $5,000, cash, $5,000. So basically, we have an encumbrance of $150,000. We need cash received of $150,000. So we are basically sending $5,000 of this cash over to a debt service fund. So transfer to debt service fund account, $5,000, and credit cash, $5,000. Now we have contract billings of $150,000, and they were accrued for payment upon completion of the fire station. So we're going to reduce the reserve by $150,000, and we're going to remove the budget encumbrances by $150,000. Basically, this where the entry reverses number one. Number one, we set it up as a budget number, and then in this next one that we're talking about, the reserve will be debited and the encumbrance will be credited. So that's what we did here. And now we're going to debit the expenditures and credit contracts payable. Are we going to pay the entire amount to the contractor? I don't think so. So the contractor was now paid except for the retention of 5%. So we're going to debit contracts payable for the whole amount and credit contracts payable retained $7,500, and then credit cash for $142,500. And then everything was determined to be good with the contractor. So the final contract price was paid, and it's going to be a debit to contracts payable retained $7,500, and credit to cash $7,500. Bond issue proceeds. And now we're going to be closing out now we're going to be, so the first entry here is paying the last part of the encumbrance to the contractor, and then we're going to close out the nominal accounts. So the bond issue proceeds was a credit, now it's a debit. The transfer, $5,000, and the credit to unreserved fund balance will be $150,000. So we're going to debit unreserved fund balance and credit expenditures. That zeroes out those particular accounts. Now, under debt service funds, resources for and the payment of general long-term debt principal and interest. It's financed by the following sources: by the general property tax, sales tax or other specified tax revenues, transfers of other fund revenues, special assessments, and revenue from investment of debt service fund resources. I believe special assessments is what we're talking about this week. Excuse me again. This week in the discussion forum. And revenue from investment of debt service fund resources. So note at the bottom, there is no interest payable accrual on general obligation long-term debt. So now we have problem 18.1. So on January 1, 2008, the city of Cape May authorized and issued $200,000 of 5% 3-year term bonds. Interest is payable annually on December 31st. A debt service fund is established to accumulate the necessary resources to pay the annual interest on the bonds and to redeem the bonds when they mature. The required annual addition for the principal and interest will be transferred annually to the debt service fund from the general fund. It is assumed that the amounts received by the debt service fund for the payment of principal can be invested at an annual rate of 8%. So let's see what we have to do here. So we have to prepare a schedule to calculate the annual required additions and annual required earnings to repay the principal on the bonds, assuming the first installment for the principal and interest is transferred to the debt service fund from the general fund on December 30th, 2008. Basically, you have here $2,000, and you go from 61,607 to 128. That is a difference of 66,000. So 61 plus 66 is 128 plus 61 plus 71 is 200. So with these, we now have 61,607, which is the principal payment. However, we need to then earn 4,929 on this amount to make it the required fund balance. And then we need to have required earnings of 10,000 to convert the 66 to the 66 would be the 4,000 plus the 10,000. You get 71,000. And remember, 71,000 is the difference between 128. So let's see what the next part is. Prepare the journal entries to be reported by the debt service fund as follows. So we have appropriations, and we have required additions. The required additions is the 61,607, and the appropriations, which is the 200,000 at 5%. Remember that in the problem? They issued an authorized $200,000 of 5% 3-year term bonds. So we have to appropriate $10,000, which is 5% on the 200,000. So the required additions has to be 71,607, which is the required payment and required increase plus the 5% of $200,000. The required earnings is right here in your schedule. And then the fund balance would be, this is basically the plug. You know what these two numbers are, you know what this number is, then this has to be the difference. And that goes to the fund balance. To record the annual transfer from the general fund, with debit cash, with credit transfer from general. The entry to record the annual payment of interest, into debit expenditures interest, 10,000 and credit cash 10,000. The entry to record 4,949 in interest income is debit cash and credit interest income. And now we close the accounts out at the end of 2000, so we have a debit to appropriations, credit to expenditures for the 5% of $200,000. We get rid of the interest income, 4,929 debit. We get rid of the transfer from the general fund of 71,607. You credit required additions, and you credit required earnings. Now you have the permanent fund. There's two types of non-expendable trust funds. One where the principal must be retained intact, but earnings may be expended, and the other one where principal and earnings must be retained intact. So you're established as a result. These are established as a result of a gift, a bequest, or some other action that requires the government unit to act in a fiduciary capacity. So proprietary fund reporting focuses on the determination of the operating income, changes in net assets, and financial position and cash flows, because it's got a whole different purpose in mind. It's not receiving federal funds and then dispersing them. This is more of a bequest. So the net assets approach all changes in net assets are included somewhere in the statement of activities. Proprietary funds include enterprise funds and internal service funds. So, an enterprise fund, activities for which a fee is charged to external users for goods and services. Examples are public utility, water or electricity, airports, transportation systems, what about parking lots and garages, recreational facilities. So resources may come from contributions or from the proceeds of long-term debt issues or a combination of both. Contributions may be obtained from other governmental units, resources of the general fund, property owners, subdivision developers, or customers. Isn't it kind of weird to think that the government has customers? Well, they do. Internal service funds, activity that provides goods or services to other funds, departments, or agency of the primary governmental unit and its component units, or to other governments or on a cost reimbursement basis. So examples are central computer facilities, central garages and motor pools, central purchasing and stores department, and central printing departments. Resources are obtained from contributions from other funds, proceeds from sale of general obligation bonds, or long-term advances from other funds. Trust and agency funds. Fiduciary funds are used to record assets held in a trustee or agency capacity, and therefore cannot be used to support the government's own programs. Let's read that again. That's very important. Fiduciary funds are not and cannot be used to support the government's own programs because they are used to record assets held in a trustee or agency capacity. That's a very important distinction. So fiduciary funds include pension trust funds, investment trust funds, private purpose trust funds, and agency trust funds. My business partner and I are looking into this right now, and today is a very important day for us because we launched our book, Act 3, Your Anti-Retirement Playbook. And it's basically a book about making your last half of your life the best it can be. Rewire, redefine, and recharge for the best, and the second half is the best part of your life. So part of that is financials. So we are trying to get a new conversation going or a new group of our population that is too old to die, because we're dying at 95 and 100 nowadays, but we're past what most are calling our prime. So what about that age between 50 and 70? They're still vibrant. They can still make a difference in their lives and in the world. So what can we do with it? So basically, I'm going into this with you because there's a lot of conversation about Social Security. Is that a trust or agency fund? I'm just throwing some questions out to you all. Is the Social Security fund a trust and agency fund that should not be used to support the government's own programs? Because how is it funded? It's funded from your paychecks. Your net pay is a lot smaller than your gross pay because of federal tax withholdings, state tax withholdings, and Medicare and Social Security tax. And you pay 7.65% from Medicare and Social Security out of your paycheck, and the company you work for has to match it. So 15.2% of your wages, your gross wages, for each and every paycheck are going into the Social Security and Medicare system. Back after World War II, the technology, the Industrial Revolution came into place. We were no longer an agricultural nation. We were a nation of factories. Industrial Revolution. And the people who were in retirement age at that time couldn't do the new jobs. They didn't have the knowledge, the skills, or the stamina. So Social Security was developed to help make their security so they could still have some sort of a normal life. And that was to be paid for by the up-and-coming next generation of retirees. So here comes the bubble called baby boomers. So now we're baby boomers, and the youngest baby boomer turned 50 this year. And baby boomers are from 50 to 68 years of age. And it's half of them have retired, about half of them have yet to retire. Well, there's less people working than ever before, paying into the system, and more people transitioning out of the system, taking money out of the system. So the reserve that has been built in by all these years from the baby boomers contributing to their paycheck and profits is now being dwindled down, and the reserve is going away and should be gone within the next 10 years. I've read some estimates. So what's going to happen with this one particular trust fund? Should be an interesting debate and discussion in the next few years, and it needs to be an actual national discussion, because it has an impact on your future paychecks, has an impact on your future Social Security benefits, has an impact on you 100%. Whatever age you are in and whatever stage in the career that you are in. So that's my little push. And if you're interested in knowing a little bit more about me, my bio is on myafter3.com. And the 3 is the number 3, not the Roman numeral 3. So I'd like to hear your opinions on Social Security and how you like the website and and the website and my bio. That was the hardest bio to write. Make yourself personable as an accountant. But we all are. We all have our wonderful personalities. So I continue to go. Capital assets and long-term debt is a fund. So to purchase capital assets, the purchase of them are recorded as an expenditure in the governmental fund statements. Proceeds from the issuance of long-term debt is recorded as other financing sources in the governmental fund statements. So under GASB 34, government reports all capital assets, including infrastructure assets and unmatured general long-term debt on a government-wide basis and reports depreciation expense as a charge to operations in each period. I didn't see anything about accumulated depreciation. Also, it says proceeds from the issuance of long-term debt is recorded as other financing sources. And the assets are recorded in assets and unmatured general long-term debt on the government-wide basis. Have you ever seen a statement telling us as U.S. citizens the debts that we are facing from all the liabilities of all of our contracts? No, because they're all within the year proceeds from issuance of long-term debt. The proceeds. And someone can have a 20-year contract with us, and we don't, in U.S. GAAP, we put the entire amount in as a liability, right? We don't do that in the government funds. And there's always been discussion about changing U.S. The governmental accounts into more of a FASB version. And I sometimes think that we need to know what our total debt obligations really are. What do you think? Do some research on that. It's going to be an interesting topic if you get interested in this. External reporting requirements. The following statements and disclosures are required. Government fund statements, proprietary fund statements, fiduciary funds or similar component unit statements, government-wide statements, and combining statements from the two major component units. And the government is required to only report the major funds in separate columns. And they have the flexibility to report more funds separately if desired. So if there's a medium-sized fund or a small fund, they don't even have to disclose it to you. If individual government funds and proprietary funds are major funds, if the total assets, liabilities, revenues, or expenses of that individual fund are at least 10% of the corresponding total for the relevant fund category, governmental or enterprise, and at least 5% of the corresponding total for all governmental and enterprise funds combined. But still, like in GAAP, we have consolidated financial statements where we have a column for each and every business unit inside of a consolidated group, and then a column for elimination entries, and then we have a consolidated set of financial statements for last column consolidations. But we know that the sum of all those subsidiaries plus or minus the elimination entries would get us the total consolidated. Here we can't do it because not all the funds are required to be reported. primary financial statements under GASB 34 are prepared on a government-wide basis. The statements are prepared on the accrual basis using the economic resources concept. This looks very familiar to your assessment. These primary statements include the statement of net assets and the statement of activities. Government-wide statement of cash flows is not required. So what is a statement of net assets? It's prepared under accrual accounting. At the minimum, its assets, liabilities, and net assets should be disclosed for each of the following categories. Under primary government is governmental activities, business type activities, and total primary government activities. And then discretely presented component units. So statement of activities presented using a net cost format separates revenues into revenue, program revenue, and general revenues. Expenses are reduced by program revenues, resulting in net expense revenue. And general revenues, extraordinary items, and special items and transfers are reported separately. What I would suggest at this time is to choose a local government that you want to look into. In fact, one of your classmates has a husband who works for a local governmental agency, and she has already looked up the statements, the CAFR, the CAFR, for a governmental agency. And you can get a lot of information out of the CAFR, CAFR. In a few minutes, we may just open up one, find one and open up one just to see what it looks like. I think a lot of these words today in this presentation and the PowerPoint may make more sense, because right now I'm thinking that there's a lot of words being spoken. So, but the MD&A is required by GASB. A discussion should provide objective and readable analysis of the government's financial activities. It should present both a short-term and long-term analysis of government activities. It should discuss current year results, comparing that with last year, and focus on the primary government, i.e. it should distinguish between the primary and component units. Okay, so if we have another 10 minutes of this, so why don't we just temporarily put this aside and go to a new tab. And let's see. Comprehensive. This is 2012, 2013. Okay. All I did was type in Ogden, Utah CAFR, C-A-F-R, Comprehensive Annual Financial Report. So let's click onto this one, because this one looks kind of good because it talks about CAFR. So let's see what we can find. Looks like the 2014 is still being worked on, and that would be fine, because it may not have a December 31st fiscal year end. So we have 2013 single audit and state compliance reports and the 2013 CAFR. So why don't we look to see what this is all about? It looks like it downloaded. Okay, Weber County Comprehensive Annual Financial Report, and it has a nice pretty picture. And it talks about the elected officers. Now, I've never been to Utah in my life, but I do know that our colleges are there. So we have an introductory section, table of contents, letter of transmittal, statement, certificate of achievement of excellence in financial reporting, and the county organizational chart. We have the independent auditor's reports and the MD&A. So let's look at the independent auditor's report. It should sound pretty familiar. We have audited the accompanying financial statements of the governmental activities, the business type activities, and the aggregate discretely presented component units, each major fund, and the aggregate remaining fund information of Weber County, and as of the end of December 31st, and related notes financial statements, which collectively comprises management is responsible. This includes the design, implementation, and maintenance of the internal control center, responsibility to express opinions. So a lot of this is pretty much similar to the audit report, the audit letter that auditors have to do for FASB, and they're generally accepted auditing standards. This is under government auditing standards. So the actual letters are a little bit different, but somewhat similar. Our audit was conducted for the purpose of forming opinions on the financial statements that collectively comprise the basic financial statements. And they talk about the opinions. And it's a longer letter. So let's go back up to the table of contents again. Then you have the basic financial statements, government-wide, government fund, proprietary fund, fiduciary fund. And there's examples of each one of these that we've been seeing in the presentation today. And then you have required supplementary information about post-employment benefits, general fund, library fund, consolidated health fund, paramedic fund, and others. Then we have a section about supplementary information on government funds, which is combining the balance sheet, combining statement of revenues, expenditures, and the budgetary compliance for each of those funds. The proprietary funds, combining statements, fiduciary refund, other schedules, statistical section, index 2 statistical section. Then we have the net position by component. There's a lot of information here. So there's a profile of the county, where the county is, and it should include Ogden, since I asked for Ogden. Yeah, it includes North and South Ogden. Economic outlook, the local economy, the percentage. It looks like it's got some permit and authorized construction values, 2011 was 66% positive, and 2013 was 29% positive. But something happened in 2012, which would be interesting because it's got the negative bar here of 42% negative. We're talking about the housing market, the employment by major industries. Looks like they're pretty much covering everything except the light on construction and light on financial services, but everything else is pretty much equally distributed. Permit authorized construction values, major initiative, and here's the actual organizational chart for the citizens of Webster County. And what the commissioners and what they have underneath them, like Commissioner Jan Zogmeister has economic development, has the library, and has parks and recreations. So here's the financial section, the auditor's report that we saw before, and now the MD&A. Introduction, highlights. The county issued $16.7 million of special assessment bonds to install road, water, and sewer infrastructure in a assessment area adjacent to Powder Mountain Ski Resort. So basically, major highlights under each one of these categories. Government-wide financial statements reporting the county as a whole. Reporting the county's most significant funds. Yet we just had that discussion, what's a significant fund? Doesn't have to be every fund, but the significant ones. So it talks about Webster using two different types of proprietary funds, an enterprise fund and an internal service fund, and internal and fiduciary funds. And they reconcile between the two, which is exactly what we talked about in the presentation. And financial analysis of the county as a whole. And these are the net positions for the governmental activities and the business type activities in the total. So they're I'm trying to find some current and other assets for business type went from $1 million. It doesn't look like it's rounded any, so it looks like it went from $1,063,000 down to $713,000 from 2012 to 2013. And then they talk about the changes in that position, revenues. You have property taxes of 30%, charges for services 34%, and sales taxes of 20% of the total. For public safety and expenses, it was mostly public safety, some parks and recreation, and some general government, with some all the other departments smaller, making up the rest. Here is the changes in net position. You have revenues less expenses, giving you the net change in net position. Isn't that the same thing like the change in retained earnings? Yeah. And then you add to it the beginning position. So the change plus the beginning gets you the ending balance, and this is a net position. So this would be the same thing as the equity section in the corporate world. This is a way of reconciling what the net assets should be, because assets minus liabilities equals owner's equity. More discussions. And we're not going to get through this today because, my gosh, how many pages is it? Anyway, you can just continue to walk through this. Here's a statement of net changes, statement of net position, which is assets minus liabilities, to get you a net position. And in this net position, we have net investment in capital assets, restricted funding for roads and public improvement. Remember, restricted is only used for the purpose intended, right? So even though they have $31 million for roads and public improvements, if Mr. Parks and Recreation needs it or public health needs it, it can't be touched because it's not public health's money. They only have $5,000. And then we have unrestricted of $26 million in the fight. I can't get rid of those things. Anyway, what I'm going to do, we're out of time for today. What I'm going to do, if you want, is I'm going to drop this down to a file. It's public document, it's public information. It was on a website, and it is public information because it needs to be public information. So I'm going to drop this down and put it into the announcements alongside of the recording for this particular lecture. I certainly hope that everything I said came out clear and technology worked for our advantage instead of working against us at this time. So I'm going to put both of these up as soon as I possibly can this morning. Oops, it's not morning, it's 1:33 my time. So I'm going to post haste, put this information up on the website as a attachment to the announcements. And thank you for your attention. And I'll see you online virtually next week. Thank you.